Wamsi, it's great to have you. So much discussion yesterday about pricing and what it meant to keep pricing on the normal phones the same. Your argument is they're widening their lineup both at the high and the low end, right?
Yeah, absolutely. I think, thanks for having me. Look, I think from a pricing perspective, what was expected was that the base models would maintain their pricing, potentially see a price hike in the higher end of the Pro models where there's less price sensitivity in general. But when we look at it from a perspective of what's happened with foreign exchange and what's going on globally, there's an implicit almost 20% price hike globally ex-US just coming purely from foreign exchange itself. So at this point in time, to raise pricing consistent with all the competitors that Cook mentioned that you just heard would mean that they're sort of moving lockstep with everyone else. And here, Apple is focused on install base and market share. And so what we really see here is Apple making a push now towards broadening that install base over which it's ultimately going to monetize its services. So I think the key over here at yesterday's event is that Apple is now trying to broaden the portfolio both on the phone side, on the watch side, appealing to ultra users and frankly, some of the users that have just not been able to use lower end versions of the watch, for example. So it's about building that ecosystem, building those products that interface so well with each other, and then driving services off of that.
Right. So as we start tracking lead times on Friday, what's going to be important to watch? What are your expectations? What are you going to be looking for, at least over the weekend?
Yeah, I think that, when you look at this particular cycle, they have 9 selling days in the quarter. Just the Plus is what's going to launch a little bit later. Everything else is going to launch on time. And we've heard from the company that they've said, look, that supply chain issues are alleviating. They were less last quarter than what they had expected. They still expect some supply chain issues in other product categories. But largely for the iPhone, we would think that this is going to be much more of an inline launch relative to the last 2 years, which have had lots of issues with either supply chain or delayed launches. So we expect a more normal sort of cadence around pre-orders where you'd expect to see that, lead times typically stretch out a little bit starting from day one over the weekend. They've stopped doing this now about releasing how many millions of phones that they sold. But generally, you can think that a few million phones would get sold within September given the amount of days that they have.
Wamsi, your price target of 182 effectively is just projecting the stock gets back to its recent high. It clearly has sort of done its job, outperforming the S&P by 12% or so in the last 12 months. I just wonder if this launch and this product rollout and just the general upgrade rhythm that Apple is in right now, whether there's anything that's going to change, let's say, next fiscal year's earnings numbers or volume numbers or something that the market kind of wasn't aware of that they're going to have to filter into the valuation.
Yeah, look, I think that when we think about valuation over here, there are so many different ways to slice this, but fundamentally, right, this has moved from a boom-bust product cycle story to one of earnings resiliency. And I think in the long run, if you think about a mix shift where product revenues can be flat and services can grow, 10-15%, we're talking about a significant gross margin lever, which is what I think is really not factored into valuation. Over time, we've seen Apple's gross margins gravitate from, the mid to high 30s now into the 40+% range, and they still have upside potential. So it's all about maintaining those hardware margins, which they can do because they're doing vertical integration, they're doing so much of their own in-house chip development, and they're doing so much more work with the supply chain, all of those to keep those product margins stable while you're getting upward tension from the services margins. And so as that mix sort of gravitates more and more towards services, that's where the multiple has an opportunity to really expand. And that's what is not really factored into most models. I think if you look at most street models, they'll have gross margins flat to down, and there is a potential for gross margins to actually go up. Or Apple could take the approach of reinvesting those gross profit dollars, like in this instance, right, by not raising prices, effectively a price cut in the face of inflation. And when you think about it in those terms, you can gain market share and get better top line. So these are the two things I think that are trade-offs that the street hasn't fully factored into models and into valuation. That's where really the upside lies.